So welcome, everyone. Welcome back. I'm really pleased to be able to moderate this next panel, which will be about data-driven solutions to advance the American dream. And it's the last panel of the day. Yay.
Yay.
So when Chris reached out about this panel, I knew it would be an excellent conversation. Of course, it's a topic that's close to all of our hearts up here on the stage. We have an all-star panel. I'll very briefly introduce. So we have Dante Desparte here from Circle. We have Melissa Koide from FinReg Lab. We have Saima Somalia from Remitly, who also flew in from my hometown of Seattle. And we have Peter Akwaboa from here from Fannie Mae, so on home turf. And very glad, all of you, that you're able to join us here. So I'll just briefly introduce the topic. We were talking about data-driven solutions, and we all agree that data are important. But the question is why and how? What are the specific data-driven insights that reshape economic landscapes and clear a path for people to pursue opportunities? The panel will discuss how data are leveraged across sectors to bridge gaps and ensure a more inclusive and equitable society. The discussion will also examine the role of data in the development of products and policy, which continues to expand access to the American dream. So one of the questions that may come up right away is how do we understand the American dream? And certainly on our call preparing this panel, we had a discussion on that. And there are different ways of understanding it. So you could have the Horatio Alger rags to riches stories. You could have maybe how comedian Eddie Izzard describes it. It's starting in the gutter, getting all the money in the world, sticking it in your ears and blowing a raspberry at everyone else. I'm not going to blow a raspberry. No, that's not what we mean here today. That's not how I understand the American dream. I think the American dream is really about getting access to opportunity. It's about coming from different backgrounds that anyone, regardless of their background, is able to build a livelihood, buy a house, create wealth, and ultimately give themselves and their children and the next generations opportunities that they may not have had themselves. And so that's what we're going to be talking about today. How is it that we can expand opportunity? How is it that we can allow people to achieve their dreams, to pass on wealth to the next generation, and how personal data can actually help in this, and in what ways, with which guardrails, with which frameworks. So let's dive right in and start with the different members of the panel. I'm going to start here just directed to my left with Dante. Dante, you've written a lot about the potential of digital technology to lower barriers to entry to the financial system. Also, for instance, with know your customer checks and other standard processes. So what do you think is needed to grasp these types of opportunities?
Yeah, well, first of all, what an honor to be on the panel, and what an honor not to have to talk about stablecoins. This was my only requirement for speaking at DC Fintech Week this year was
How did you get on this panel?
I need a break. You'll see. You'll see. I snuck on. So the reason I became interested in what blockchain technology could do was because so much of the world's infrastructure, particularly the data that unlocks your and my financial lives, sits in single point of failure honeypot databases. And so I spent the better part of my career in risk and resilience and national security. And remember the Equifax breach. It exposed for the rest of your and my natural life a lifetime of identity theft risk. And you think about the three services or the services these types of organizations provide, Equifax, Experian, TransUnion, they're single-sourced gatekeepers for every long-term financial decision an American can make. And so if you want to achieve the American dream and you want data to play a part of it, we need to figure out how to actually give it back to people. And so I think there's a very, very powerful storyboard to be told here about gatekeepers locking us either in and or out, and single alphanumeric numbers, either your social security number or the credit score that you get, is being dispositive of every choice that you will get for the rest of your natural life. I think we could do better in architecting an alternative system to that. That doesn't mean you have to throw away credit checks and reference checks and all these fun things, but I do think we should aspire to this notion of empowerment and agency and not presume that every one of us has to have a third party between us and the rest of our financial lives. To me, that's a very big part of the American dream, is people who come to this country have agency. You need agency, otherwise, guess what? You're not going to survive, because the ladder of economic mobility in the United States is slippery, it's barbed, and it's guarded. And we have an opportunity at least to have a conversation about how data can shift back to people, and with that, the people can then get back the power that they need to make better long-term decisions.
Thanks a lot, Dante. So let's move to Melissa next. Melissa, I mean, data is, I think, very much at the heart of what you guys do at FINRA Lab. The mission is to improve public policy and market practices by filling knowledge gaps. And of course, there are a lot of knowledge gaps on the optimal use of data. So can you share with us what your approach is to empirical research and market intelligence, and where do you see the greatest potential from data-driven solutions?
Absolutely, and again, I second the appreciation for being here. I think it's really fitting that this conversation, the first day, we're coming back to the topic of data. I said it last year at Fintech Week, it was repeated, it's the data dummy. We're not in banking, we're not in fintech. Blockchain may offer real potential because of the data and where does it sit. We come at these questions very much from how are data enabling more people to be a part of an affordable, responsible financial ecosystem, no matter who's providing it. And so we do a lot of work around interrogating opportunities for leveraging data to bring more people into the financial system. You know, you think about credit, we have up to 50 million people just in the US alone who can't be credit risk assessed sufficiently because of the data that are used for underwriting. But you think about how many people have not just a bank account, transaction activity, but a prepaid card. You think globally about where we see people leveraging mobile payments and generating transaction intelligence. That kind of information is instrumental to making sure that we are bringing the billions of people across the globe, the 50 million people in the US, into credit, into transaction activities, into our topic of today, what is the dream, right? The ability to build stability and ultimately wealth for yourselves and your offspring and your loved ones. And so that is what motivates the work that we do. To the very sort of specific question, we spend a lot of time working with industry stakeholders, many of you in this room, to build the kind of research, to build the empirical understanding of how do data work, where don't they work. When you're thinking about credit underwriting, we're now actually spending time, and I hope this is a good transition to you, around the importance of data for are you who you say you are? And then one more thing I just want to add on, we're also at a point where, and I think we all know this intimately, the data itself, if we don't get the governance right, if we don't get the access points right, and blockchain is interesting. You hear me giving you some space here on that one. We have this debate every time we get on a panel. The bad actors are after that data. And so we're not just at the need of like, let's fix the system and do it differently on a going forward basis. We're also at the point where if we don't get the data access and the data governance right, bad actors are going to be taking advantage of it and more people are going to be excluded. And so it's a really pinnacle moment for all of us in this conversation around data.
Thanks a lot. So we'll go to Simon next. And Simon, Remitly offers remittances services for immigrants from around the world. So can you talk about the role that data play in your business? And I'll pose the same question as to Melissa. How do you see the potential of data-driven solutions to enhance opportunity?
Yeah, so I'll start with like what is a remittance. It's a cross-border payment, typically person to person from an advanced economy typically into a developing economy. That's sort of not always, but generally the way it works. And for our system on Remitly, we are a digital application, and so our customers don't have to go and stand in line at a brick and mortar. They can come and do their transaction using their mobile phone or a website, typically a mobile phone. And so that has been an incredibly important industry for when we're talking about the American dream for many immigrants that come to the United States. The opportunity to create economic value and create prosperity for themselves and share it with their families, and maybe even think about, in many cases, thinking about that American dream as something that they're going to then take home with them to their home country, is what the American dream means for our customers. And so the ways that we've seen data be really powerful and impactful in our business and our ability to serve those customers has been in probably infinite ways, but I'll talk about maybe three here. The first one is finding those customers. So, I think we're all familiar with how powerful some of these marketing tools have become across the big tech players, but finding that data and using that data to figure out what is the most efficient way to find customers to market to and tell them about the products and services that are available to them in the marketplace. And Remitly actually started off as an aggregated price disclosure mechanism. And so starting with finding the people that are looking for what you can provide and giving them information efficiently is an incredibly important way that companies can leverage data. The second one that I think has been really important for us in inclusion has been finding ways to serve our customers better. And so recently, like probably a good example is we were finding throughout our transaction systems, aggregating the data, that we were having quite a few customers at ports of call trying to access the system and accessing our system using satellite systems, which is weird and it trips your KYC system, right? So these transactions get sidelined, they look spooky, they look weird, and we don't process them. Taking a look at all of that data together, we were able to realize these are seafarers. So they're on boats. They work on cruise ships. They're naval officers. And they're a whole category of customers that's perfectly legitimate. They just don't have a permanent residence. And most United States systems require a permanent residence. And so we were able to go out and diligence cruise ships and naval ships and sort of verify in our system in a diligenceable way, in an inspectable way, that these are perfectly legitimate addresses. And now there's a whole new category of customers that can use these remittance products and services. And so, multiply that by 1 million, right? You can go out and find these customer sets using these aggregated data sets in new and exciting ways that improve the penetration of products and services, especially financial services, to individuals. And then the final way I think that's worth touching on is what you were alluding to, which is like fighting crime better. Like the best people and the worst people in the world want to use cross-border payments apps, right? And I'm the chief legal officer at Remitly. It's my job to never, ever forget that some of these people are money launderers, drug runners. I'm sure we've all read the TD bank consent order, so I'll stop there. And so the more data you have access to and the broader that data set is, especially with AI, the better you can recognize those patterns. And like, make no mistake, even when you're at the top of your game, they're really hard to find. Like these guys are really good. They have ways to hide their VPNs. They're using VPNs to hide their locations. They quickly switch from jurisdiction to jurisdiction. And so, that's also an incredibly challenging area and one in which you can use data to really find the bad actors and exclude them more efficiently.
Thanks a lot. Yeah. So let's move to Peter. And here at Fannie Mae, of course, Fannie Mae aims to facilitate access to home ownership and to quality, affordable rental housing. So what types of data-driven insights are needed to ensure success in your area, and which types of data can play an important role?
So first of all, thank you and welcome to Fannie Mae, and thanks to Chris and the Fannie Mae team for putting such an amazing event together. I would say I'm also encouraged by the diversity of this group. I actually just looked around and I thought this is excellent from a diversity point of view. Let me take a step back, and I think just throughout the whole day, the way I think about it, I've been hearing 4 things. In fact, actually 3. The fourth one I didn't really hear a lot about, A, B, C, D. What is A, B, C, D? AI, blockchain, cloud, and data. I've heard so much about A, B, and D, and cloud. It looks like cloud has become table stakes. It looks like the A and D is graduating to PhD. There's more to work to do, but blockchain is still yet to graduate. So just think in context, but just bringing it back to data itself and what Fannie Mae is doing. I want to share my own story with you. So 2017, I moved from Singapore to London. My life has always been moving around. And so you can think, who's Peter Akwaboah? How's Peter Akwaboah been underwritten? You just think about that. So I moved to United States. I rented first, and 2018 I decided to buy. There lies the problem. I moved April 2018 I decided to buy. Guess what happens in April? Your tax returns. I had no tax returns. So just think about it. No tax returns. And when I live in the UK, I grew up in Ghana, I grew up in the UK and a few others. My way of thinking about credit is when I have the money, I buy it. I buy cash. That's my value. So I come to the United States, everyone says, the way to think about credit is you need to borrow to have credit. And I'm thinking, well, how does that work? But this is what happened. So then I'm trying to buy a house, and nobody can understand who I am. They ask for tax returns. I don't have tax returns. So they asked me to quickly put a draft tax returns together and then start putting different data together. So fast forward, the ability to underwrite something like me was very difficult. And if you think about what is happening, it becomes 2 things. Now looking for a house, supply is an issue. And when you think supply more broadly, roughly if you think globally, there's probably about 300 million supply issues. In the US alone, you've seen all the data that's been talked about, which is roughly 3 to 4 million supply issues. This is a global challenge. The other side is the access to the financial itself, the credit itself, which was a challenge. So when I bring it back to Fannie Mae and some of the work we're doing, I like to think about it, which is definitely not just a US issue, but a global issue. Access to alternative data that allows us to really think about, Melissa, some of the things that you talked about, whether it's bill payment. These days, people are using social media to be able to access people's credit. But those are some of the things that we're doing in Fannie Mae, both on the multifamily side, where we've seen that some of the changes in positive rental and cash flow, we're seeing even some of those, our FICO scores are going up on average 36 points. We've seen the same on the single family side when we started using alternative data to start measuring and underwriting and so. So this is just the tip of the iceberg. The way I like to think about data is that it's not just data. Data has to give you some knowledge. It has to then translate to information. And ultimately, where we're trying to get to is wisdom. If we can get to wisdom, we make the right decisions to move things forward.
Thanks, Peters. So let's just follow up a little bit. So Dante, now I am going to ask you about stablecoins.
All right, good.
So Circle, I mean, you guys state you aim to make digital money available on the internet around the world. And by definition, digital money generates troves of data, in particular transaction data. So can you walk us through how the use of such data could help to advance opportunity?
Yeah, I mean, I think one thing, first of all, what an amazing panel and what amazing insights. I think one thing that we have to presume, there's a tension in the blockchain world, which is that a ledger that records everything that has ever happened on it indelibly forever is a treasure trove of data that in some respects not only creates a tension with GDPR and other privacy rules around the world, it eventually either becomes a good thing or a bad thing. In fighting illicit finance and illicit activity, it's a hard place to operate and expect to get away with illicit activity on blockchains for a very long time. Yes, it's fast money and it's internet scale money, but it's also trackable and traceable money, which is why the illicit finance community loves crypto assets for tracking and tracing, because we leave behind digital breadcrumbs. That's a feature, not a bug. But if at the same time, those digital breadcrumbs end up yielding people getting debanked, losing access to their financial services, or violating their expectation and their right of privacy in their financial lives, then we have a different problem, a very distinct societal problem. Which is why I'm not a fan of retail central bank digital currencies. I just had to say it. So for us at Circle, we are a wholesale company. We face institutions who then face the retail customer, and the retail customer ultimately has USDC and our other sort of currencies in their digital wallet. To me, that's a powerful feature, not a bug. That there should be an air gap between the banking system and how people spend their money in any of its forms, and that to the right of lawful, the use of money should be as free as possible. I think it's a feature we have to preserve and protect and not encroach upon that. But at the same time, exactly as the panel described, there's an opportunity here to exact the cost on illicit actors as opposed to penalizing entire continents or subregions of the world who are systematically blocked out of financial access because of fear of one person making one bad payment.
But this is a nice segue. So Melissa, I mean, you guys have been looking at how data can be used in different ways, including for credit and machine learning credit models with and without alternative data. So can you tell us about that work, and in particular the conditions that are needed for machine learning credit models to play a constructive role?
Yeah, and I'm going to end up giving a shout out to the OCC, given some of their motivation around understanding how to evolve policy, law, and regulation in light of machine learning as a form of AI. So you've heard earlier, machine learning has been used, for decades by at least 20 years by banks, the financial sector, supervised machine learning. But it is more complex. And so as we're thinking about using these models that can understand data and relationships that are nonlinear in fashion, but also yield more intelligence, whether you're fighting fraud or you're trying to credit assess somebody who may have a thin credit history, the combination of that more sophisticated analytical tool with more representative data that is more insightful, what is your transaction activity, may or may not correlate with something like income or wealth. So you're then sort of bringing those two approaches, the data and the more sophisticated analytics, to do a credit underwriting model. So our research originally started with interrogating the data, shorthand, quick answer, cash flow data are predictive of credit risk of people who you would otherwise turn down with more traditional means. That's huge. Two, we recently looked at machine learning around core, frankly, just fair and human expectations, right? Do the models create disparities? Can you understand the models, use techniques to understand how a machine learning algorithm, supervised machine learning algorithm works? And there we find you actually can, but it takes a lot of human study, a lot of human oversight, a lot of understanding of the data that you're deploying and correlations in the data. But you can get better outcomes. And you could even find models that generate more fair outcomes than a more traditional credit model approach. And so that's enormously valuable as a scale opportunity for building short-term credit needs, long-term wealth opportunity. And what you're alluding to is now we're going to put this together, the peanut butter sandwich, and really interrogate all of those pieces together. So more to come on that, but that is research that we have underway right now. Excellent. Oh, I didn't give my shout out, but we're almost out of time. OCC is really trying to get their arms around these questions with a group of banks and others to interrogate some of the regulatory questions.
Very good. So I know we're coming up on time, but there's one question that I really wanted to pose. And so it's, here in the United States, when we say American, we tend to think from the United States. But I work in our BIS Americas office in Mexico City, and I work with central banks across the region. And very interesting and sometimes funny thing comes up that if you say American in other places, they think, yeah, we're American too. And so there are 1 billion people in this hemisphere. We're only about a third of the population of the Americas. And I think that, of those 1 billion people, I mean, yes, they say we're Americans too, and we also have dreams. And so I wanted to, widen this discussion a little bit and discuss, what particular opportunities can there be across the region, particularly in Latin America and the Caribbean. And let me pose this question particularly to Saima and to Dante, who I know have views on this.
Yeah, so I'll take a little bit of the maybe contrarian view to you, Dante, here, and say that at Remitly, we're huge fans of digital currencies as well as national payment system access for payments companies, which you may also agree with. What we find is, around the Americas, and let's take the Caribbean, for example, there are banking deserts, right? The penetration of banking systems, services, and infrastructure can be quite thin. But for payments companies like ours, we do have quite a bit of digital adoption, right? And so when we look at developing economies around the world, India, Brazil, and many others have had quite a bit of success with creating deeper financial inclusion by pushing and using the digital infrastructure that is already in everyone's hands, whether that's a telephone or a mobile system. And so payment systems can be that infrastructure for places that have banking deserts. There's more and more capabilities that don't really require a deposit account that companies like Remitly can provide more quickly and cheaply and affordably with national payments rails access. And so for the Caribbean, where a bank may not be viable locally for them in the short term, having that system on their phone will give them that liquidity access that otherwise just isn't available. So I think that's one that we're always working on.
Excellent. Dante?
There is no greater export than the US dollar. And there's no greater need and no greater region of the world, a region where every decade Argentina has a currency crisis or a debt crisis of some kind, no offense to my Argentine friends, then the ability to extend the reach of the dollar to places and to devices, whether it's through Remitly or USDC and developers and entrepreneurs all over the world. This is the greatest export the country has. And so I agree with you entirely. The American dream is not a US fabrication, but it is an American export. And not just in Latin America, but frankly all over the world, the extensibility of the US dollar is the very best thing that we can do as a company.
Very good. So I think that we're at time, but I wanted to thank all of our panelists for your excellent remarks, and please join me in giving a round of applause to the